Hi, everyone. Welcome back to another episode of the Teams for Business podcast. I'm your host, Kaiwan,
I'm Jack.
I'm Jackie.
and today we'll be discussing deflation and how China is currently suffering from it as consumer prices continue to fall and economic pressures are mounting. So, deflation is essentially where there's a sustained decrease in the general price level of goods and services in an economy over a period of time. So, in other words, it's like the opposite of inflation, where prices they tend to go up. So, there's more like money being put in. So, prices go up, and deflation is kind of like that opposite. And this past month in November, China's consumer prices fell the fastest in 3 years. And while factory gate deflation like deepened throughout the country, which indicating like rising pressures as weak domestic demand basically cast doubt over the chances of them to have like an economic recovery. So it's just the economic situation in China right now is pretty tough. So I guess the first thing we're kind of going over is like what is deflation? Like what causes it and things like that.
Oh yeah, I can take this. So essentially deflation is kind of just defined as like a significant decline in consumption. Like that's what happens. Just like I would mention, like very basic, I guess, economics here is that if you have like less consumption as a country, you just have like less spending, less like from the government, like less spending as consumers, like the average consumer, just general things like that, and you're like not producing or like you're not having as much money, you're not spending as much. That's just what general deflation is. And then when we think of inflation, that's kind of when the currency that goes up and everything, and like that's kind of what we hear all the time, like, oh, there's a lot of inflation, especially the past few years. It's like, okay, well, inflation. It's kind of like the opposite of that. And we also, with deflation, I think like one of the most common examples that we think of is the Great Depression, from the 1940s, like 1930s. And I think like with this situation, it's also kind of like the economic cycle. Like AP economics popping through here, guys. But it's kind of with that where it's like after you have inflation, like obviously your currency can't just always be going up. And so you have like the deflation period going down a little bit. And it's just like that cycle. But like obviously some countries experience inflation on a much greater scale than others. Like I know there's like a lot of political and geopolitical examples. But that's kind of like the general cycle of how it works.
Yeah, I definitely agree. And yeah, just as Kevin and Jackie mentioned, like deflation exists is when there's like a sustained decrease in like the general like price level of goods and services. You can use the consumer price index to pretty much measure that as long as you have like a base year to refer to, and then you can use the prices of the current year, and then you can like refer that to the base year. And so some of the causes of deflation that I like kind of like research, there's obviously a significant like decline in China in terms of like consumption spending and investment spending in terms of like net exports. Like for that, like net exports, I think we can pretty much attribute that to like those like geopolitical tensions between the China and other countries. And then like consumer investment spendings, I hypothesize that this probably is most likely due to the wariness of COVID and other diseases. And like when China like went under lockdown due to a rapid like COVID spread, we obviously saw that they had very stringent lockdown procedures compared to other countries around the world. And even if like the lockdowns were like rescinded like after the COVID has gotten like less severe, we've also seen, but people are still like wary of the risk of like potentially going outside. And as a result, I think that has like impacted the purchasing for like property, working like the manufacturing industries, and that is why the property industry and the manufacturing industries are all significantly down.
Yeah, definitely. I just think like overall is basically like a basic understanding is when consumer spending basically just declines for a period of time. And this just overall leads to the economy being worse as a whole because businesses are making less money with people spending less money. So I think that that kind of leads us to the next point where like what are some of the like impacts that deflation specific impacts that deflation causes. I know there's like it's definitely some part of it is negative in terms that of like limiting profit for different businesses, but I think there's also positive aspects as well.
Yeah. I think some of the immediate impacts of deflation that like we think of is that like obviously like your prices decrease, so like the consumer spending power can increase. And then that also kind of brings up like the inflation versus deflation. I think like they're not always like bad per se. Like inflation isn't always a bad thing. Like deflation again, like also isn't a bad thing. It's really dependent on the situation. Especially for like some countries out there where like a dollar bill in the US like literally translates to like $1 trillion in like their currency. And like obviously that's a very extreme example like of one country in the world, but it's just in general, like sometimes some countries deflation is good. And then also I think deflation as a whole like does have like consequences, of course, like the same with inflation and deflation. And then like when we're talking about China specifically, that just means like customers aren't spending as much. And then the problem with that though is that like that's not always a good thing for example stocks. And this is something because like some of my friends are talking about this, and like there's like competitions about this. And so like this is how this is what I'm thinking of right now. But like when you have that, like a lot of the times what happens with that is like the stock prices go down. Like the immediate impact of like what we see is like those prices go down, and then with that, that means that like obviously people who invest in the stocks, like their like shares go down as well. And so I think in general, like there are consequences, but also like it really depends on the situation. Like if your country has been experiencing a lot of inflation within the past few periods, then having deflation necessarily isn't always a bad thing, because you always need to bring it down a little bit. But if you're going through a consistent period of deflation, that just means like that's also not good. And then you also need like more inflation. It's kind of like a balancing act. And that's like why we have like in the United States at least a lot of these like government programs or like government agencies and institutions where they kind of control things like with the rates, and just to make sure like it's not going crazy out of hand like with inflation or deflation.
Yeah, I definitely agree that it really like depends on which situation the economy is in. Like right now, I wouldn't consider that the current economies around the world are in like a normal situation, because like more of like the countries such as like US and some countries in Europe, they have been in consistently been in inflationary gaps since COVID, but also like during but right now like China obviously had a little bit of inflation before COVID, but after COVID now there's obviously a lot of like deflation. And I'm going to start with talking about some of the more negative impacts. Like obviously we've seen like China's deflation like increase like more like in these past months. Its consumer price index is keep decreasing, and there's a potential risk that there's like extreme deflation, and that could like lead to like people or businesses defaulting on debt. And that's obviously not good, because in that case then they cannot repay whoever like loaned them that money, and it's a very precarious like situation there for everyone involved. And also another issue is that if this is like not controlled in like soon, since China has such a large influence in the economy, we could see like this like reset deflation spill into like other like developing markets, many of which are close to China and like around the Southeast Asia, and they're also like main players in like um manufacturing, and we could definitely see the impacts of China's deflation go into those. But then on the other hand, it could also have like some like positive effects. Like right now, like a lot of like countries, uh more countries are in inflation than in deflation right now. So we could see China's deflation potentially actually helping the world economy just like potentially disinflate, which is could be a good thing in terms of like tackling the current like inflationary gap. Yeah.
Yeah, I definitely agree. I think it's definitely like a balance. It's definitely countries need to strike that balance between like what the economy is going through in terms of inflation and deflation. But just in terms of like the impacts of deflation, like just negatively, of course, it's going to be consumer like spending reduction. And like also because like money is going to be the value of money is going to be increasing because there's less money being spent. Like the burden of like debt, let's say you take out a loan, that debt is going to be increasing because that value of that money goes up. I think that can be like both a good and bad thing, because if you have that extra money, it does increase your like the purchasing power of a dollar for some people. It does help them, but like overall it's just like, I guess it's just like there's benefits and there's a lot of like negative impacts of that as well. But I think the main thing is that countries need to figure out, and like the governments need to figure out like what needs to be done. And I guess the next part is just going to like, if a country is like truly suffering and deflation is a bad thing, how can a government best fight deflation, with what different policies would work?
Yeah, let's like talk about China like specifically. One thing that they were trying to do a while ago was like real estate. And so just for some context and background, in a lot of like the big cities in China, so like Beijing, Shanghai, Shenzhen, like we hear like these huge mega cities and like real estate prices, like for one condo, like one bedroom apartment, like the prices are incredibly high. Something of like New York, LA standards are like even higher depending on where like the city, like which city it is, just incredibly high prices as a whole. And a while ago, they were kind of dropping, like the market wasn't as hot as it was before, because a few years ago, like the market was incredible, like it was very, very hot. And so like now like it's not as hot and like they're trying to obviously get the prices back up with the real estate and like that also kind of ties with deflation. And like China's policy hasn't like really been working right now. Like it might work in the future, but as like right now, what they've been doing isn't the most productive, isn't the most effective. But that is one example of a country trying to get their prices up of because like when you have higher real estate prices, obviously that means like okay, the person selling it, like assuming that there actually is a transaction there, the person selling it gets more money, and then like the people, the third parties get more money because like percentages and commissions, and then the person paying obviously is like spending more money into the system. And so like with that spending, that kind of just ties back to the whole concept of wanting people to spend more of their money. And obviously that's like a very elementary explanation of it, but that's where it comes in of like okay, you spend more money, like you buy a house, like all this money you put into the system, like okay, like the land, the person who owned it before, they're going to spend this on something else, the person like the third parties are going to spend it on something else, the person that reconstructs your house or like moves your furniture, like that's more money that they can spend on something else. And like that whole cycle of everyone involved, that's just more money in. And like that contributes to deflation, like in just one specific case relating to China.
Yeah, I definitely agree. However, I do think that like current policies right now that are trying to stimulate the real estate market in China is kind of ineffective. And I just think in general, like the government spending, they need to just spend more on like other like markets, like potentially more spending in the manufacturing market, because that's obviously a really like big market in China. And that's like I think that's actually China's like biggest like uh percentage of their like economy comes from manufacturing, and that needs to be stimulated more again to like boost China's economy as a whole. On the other hand, on like another perspective, I think another way that the Chinese government can fight deflation is like beginning to set more increased like trade regulations with other countries like around the world. Like when it was like COVID lockdown, they just like completely locked up. Nobody, barely any country could like really trade with China. And at that same time, there are also like some geopolitical tensions between China and other countries, and that definitely also like decreased trade. And this is also a little bit of a more elementary like explanation, but obviously, if we were to see more increased like trade regulations and like increase like trade as a whole with other countries, most likely we're gonna see net export increase in China. Like right now, as we discussed in a previous episode with like the global like shipping crisis or global freight recession, we've seen that like some countries like China have like a lot of like excess like materials, excess like capacities. They can hold a lot of things, and to like solve that, they have to like export that out. And by opening like those trade increasing trade in that way, they can like allow for more of that like spending to happen, which could help China's like GDP and potentially help their economic situation.
Yeah, definitely. I think that the main thing, like what why China's kind of going through this right now is that like their biggest private developer is called Country Garden, and they've basically been they haven't been able to generate a lot of money because there's like a lot of turmoil at like investment companies in terms of like just like suggesting a troubled like real estate market. So just overall, I guess like the economy isn't functioning well. So the government needs to do its part in trying to stimulate that, whether it's like lowering interest rates, like making the central bank lower interest rates to encourage borrowing money, encourage spending, or like Jackie mentioned, like different policies that governments need to enact just to kind of get that consumer spending back up, because that's the main thing in terms of deflation, is that people aren't willing to spend money because they feel like they don't have that extra money to spend. And yeah, just like putting more money into the market, whether that's through different trade regulations or things like that, that's the most important thing for combating deflation. So I guess our next question is going to be like, how might deflation in China be influencing consumer behavior and spending patterns, and how does like it reflect on like the overall economic health as a whole as well?
Sorry. I think it's just kind of like what's happening as a whole of like the general effects of deflation and the general effects of spending money and how what goes with that. I think like with China specifically, it's kind of like a difficult situation to really analyze fully, because when you look at like the United States, like maybe that's not a great example, but like you look at very like capitalistic economy, and you like have all these rules and like what we've seen. But when you have China, like you can't only just think of like, okay, like economics says this, so this must happen also. Like I think with China, there's so much more like politics I have to consider, and just geopolitics as a whole also, because trade does have a very big impact on a country's GDP, inflation, deflation, things like that. Oh, speaking of GDP, like that's also obviously a very big factor as well, like something that it impacts. And I think like when we're talking about China, like the general like health of the economy, like obviously looking at deflation, looking at like inflation, how like the levels of consumer spending and just things like that, like we can't only look at, okay, like house prices aren't as high, or like there people aren't spending as much. But I do think like as a whole, like with China, um there is kind of like this disconnect between like cities and like the more like the rural areas. And like obviously we see this in like other countries as well, but like we also see this very prominently in China, where like the big cities, it's like, oh hey, like we have these like insanely expensive houses, and like you go into like certain areas of China, especially more towards like the east. Wait, let me get my geography. Yes, the east, or like more towards like somewhere else, like the north. Like the economic levels just aren't the same. It's like you also have to consider like this is all like working together as like one country, and you can't just isolate like, oh well, like this house is like 6 million like Chinese dollars in Shanghai. Like that's all just very different and like different baselines.
Yeah, there are definitely a lot of like factors that come into play. Like obviously, China has more like geopolitical tensions than most other like countries in like a regular like economy. And then I know like a lot of people who like think that right now like China's like deflation could allow for like more spending, because obviously consumer power, spending power has like increased if like the consumer has saved a lot. However, I think there's a big counter argument to that, because that if like in the situation right now, it's kind of clear that China's like deflation will continue for quite a while. So in that case, like if consumers are gonna predict that, so if they're gonna predict that prices will keep decreasing, then they'll just like keep saving their money until they reach like a lower price. And then at that point, then they will spend. And then I feel like if China's like deflation will keep like continuing on into like next year and potentially even beyond that, like that could be a very dangerous economic situation for China, because if consumers keep waiting on like purchasing anything, the GDP will keep like going down for like the short run. But then if they start spending again, so if they start spending again, the GDP will come up, but that's obviously not going to happen until like the spending actually occurs. And overall, that just creates a really precarious situation for China's economy. And I know for like the global economy, it may be good for a little bit of time, because like China has such a big influence in the global economy, and so it's like deflation contrasts much of the inflation that is occurring in other like developed countries, and in that case, it could help the global economy for like a for short amount of time. But like if this crisis like keeps continuing on and China's economy continues to keep like suffering, and then I think potentially even at that point the global like economic health may like decline a little bit, just due to because China has such a big influence in the global economy.
Yeah, I definitely agree. Just one like really quick note. Like we keep saying like consumer spending, like the average person just has to like go spend money, and like like that's gonna increase inflation. But like one quick note about that also, like obviously that's very like theoretical econ, but like it's also like the average person needs to have money to spend, right? Like it's not just, oh yeah, like go buy more stuff, go buy a new car, go buy like a new house. It's like, well, they also have to have money like in their bank accounts, like in cash, like to spend. It's not just, yeah, go spend money. So I think like there's a lot of factors that like work together, because a lot of people I know like would they're like, okay, well, this is kind of like a precarious situation. Like, let me not go out and be like very reckless or like spend a lot of money. Like, let me just have it in the banks. And as a whole, like that's not gonna like have the effect of like consumer spending that we want. So it's not just like, oh yeah, like they go spend money, like, very easy. It's like, well, we have like the government has to, or whatever institution has to think of ways to get the customers to change that mindset and actually take the money out of the banks or like out of their assets and go spend it. So there's just like a lot of factors. And I think one like very big part is like thinking, how do we get people to go spend their money? Because it's not just like some policies, as we have seen, have been ineffective. And like that's kind of where a lot of it lays.
Yeah, exactly. Just like tying that back to like with China, I think they mentioned like the study that they done that like Chinese consumers are very like much warier about the economy, so they're less willing to put money back into like the different markets, right? So they've really been like, I think they use the phrase like tightening their purse. They're not really spending that much money anymore. So it is like on the Chinese government. Like Xi Jinping actually warned that the country's economic recovery was at a critical stage, as like officials are pledging to step up and provide fiscal and monetary support. So it's just really like what the government, it's on the government to kind of initiate that trend of like encouraging people to spend money through whatever policies they have that give the people like that sense of relief that they're not just blowing that money away, because it's in that time is scary. Like you don't know like how much money you have and how much you can give, because the economy is at a downturn. So yeah, I mean, that's it for today's episode. Thank you guys for joining us, and we'll see you guys next week.